Welcome to Channel 41. I'm Jack Mitchell, and I'm here today as a stock analyst and financial advisor to discuss NVIDIA, ticker symbol NVIDIA. So let's dive into some predictions. I'm setting a price target of, around $145 for the next 3 months, about $155 for 6 months out, and maybe $170 in 12 months. I'm currently recommending a buy rating on NVIDIA. Okay, so looking at the data provided, NVIDIA's current price is $138.25, up from a previous close of $135.34. The 52-week range is between $45.01 and $152.89, showing significant volatility. The price-to-earnings ratio is currently at 54.64. Now, the provided financial data from NVIDIA's quarterly report shows a revenue of $35.082 billion for the 3 months ended October 27, 2024, a substantial increase from $18.12 billion in 2023. Net income also saw a big jump, reaching $19.309 billion. Emma, what are your initial thoughts on NVDA's recent performance, particularly the substantial revenue and net income growth?
Well, Jack, I see you're bullish on NVIDIA, predicting $145, $155, and $170 in the next 3, 6, and 12 months, respectively, with a buy recommendation. I've looked at the same data, and while the revenue and net income growth are impressive, the price-to-earnings ratio of 54.64 is a bit concerning, given the recent volatility in the stock price. The 52-week range really highlights that, going from $45.01 to $152.89. So, while the financials look promising, the high PE ratio coupled with the stock's volatility makes me a bit hesitant. I'd like to see how the market reacts over the next quarter before fully endorsing a buy rating.
I understand your hesitation regarding the price-to-earnings ratio and volatility. It's true a PE ratio of 54.64 is high, and the 52-week range does show volatility. But, let's dig into the details of that volatility. The provided historical data shows a significant drop in early September, with the stock price going down to $102.82 on September 6, 2024. However, it's recovered considerably since then, now trading at $138.25. I think this actually demonstrates resilience. Also, consider the broader market context. We've seen increased demand for NVIDIA's products, particularly in the data center and artificial intelligence sectors, driving both revenue and net income growth. Look, the demand is reflected in their financials, with data center revenue at $30.771 billion in the last quarter. So basically, while the PE is high, I believe it's justified by the growth potential. The EPS earnings per share is $2.53, which is pretty solid. To be honest, I see the current price as a good entry point, despite the volatility.
Jack, I hear what you're saying about the stock's resilience, recovering from $102.82 in early September to $138.25 currently. And yes, the demand in the data center and artificial intelligence sectors is undeniable, contributing to that $30.771 billion in data center revenue. But I still have reservations. A key point for me is the sustainability of this growth. Look, while an earnings per share of $2.53 is good, it doesn't fully alleviate my concerns about the high PE ratio in relation to the volatility. The market's reaction to the September dip was a swift recovery. Yes, but what external factors contributed to that? Was it a temporary market correction or a sign of underlying instability? I'd like to analyze the volume traded during that period. High volume during the recovery would suggest stronger investor confidence, while low volume might signal a temporary rebound. So, for me, a deeper dive into the trading patterns during that volatile period is crucial before making a definitive judgment.
Emma, you raise a valid point about the sustainability of NVIDIA's growth and external factors influencing the September recovery. Analyzing trading volume during that period is indeed crucial. So let's examine the data. Volume traded during the dip and subsequent recovery ranged from roughly 273 million to 477 million shares. While not exceptionally high, these volumes are substantial and suggest decent investor confidence, not just a temporary rebound. Well, to be honest, the market did react strongly to the initial drop, but the recovery volume indicates sustained buying pressure, which, reinforces my bullish outlook. Basically, I believe NVIDIA's growth, driven by its strategic positioning in key tech sectors, justifies the current valuation. Okay, folks, that's all the time we have for today's discussion on NVIDIA. We've delved into the data, examined the financials, and considered the market dynamics. Don't forget to like and subscribe to Channel 41 for more insightful stock analysis like this. Thank you for joining us.